Welcome to our March lecture entitled IMF 101, The Evolving Role and Functions of the IMF. And the lecture will be delivered by Mr. Andrew Edward Wayne Mitchell. The lectures at the UWI Open Campus, of course, are a regular feature of our calendar, our annual calendar, and we would like to make it an even more regular feature. We believe that as part of our duty to fulfill the outreach and public education mandate of the University of the West Indies, that we owe it to the general public to put on lectures on topics of general interest. We would like you to assist us by suggesting topics that you think you would like to hear, to be privy to, and we will do our best to ensure that we get the appropriate specialists and expert lecturers to facilitate. I think if more than ever our society is in dire need of public education. I find myself often appalled at the level of ignorance and narrow-mindedness that seems to permeate the society. And I think we will do whatever we can to address this and ensure that people are in possession of accurate information on which they can base their critical responses to what is happening in the society around them. So we're hoping that in some measure these lectures can help to alleviate that type of narrow-mindedness and to broaden people in terms of how they think, how they think of things and how they see things. This particular one, the IMF 101, I thought very interesting because, you know, instinctively when people hear IMF, there is an almost knee-jerk negative response. I'm sorry to have to say so, Mr. Mitchell, but that is the fact of the matter. I think for most people, we associate the IMF with, you know, punitive fiscal measures and, you know, economies in distress and a number of other negative things, unfortunately. So I'm hoping that this lecture will illuminate the IMF and what it does and its roles and functions in a more positive light, and perhaps we can leave here with less fear when we hear the dire word IMF, you know, and we begin to tremble, and that our society is probably the economy is going to collapse. So I invite you to sit back, relax, enjoy the lecture.
Ladies and gentlemen, thank you for coming in tonight. I want to take the opportunity of trying out two things. I actually have two lectures. I try to gauge my audience interest in particular topics and try to customize it as I go along. One lecture is on the IMF in terms of its functions and roles, and another one looks at regional economic performance recently. And with your forbearance, I can do both, or if you like, I can do one or the other. But let me preface anything that I say here tonight by the following. Saturday morning, I sat down in a coffee shop, something similar to Rituals, and had an engaging conversation with a 70-year-old lady. And about 20 minutes into the conversation, she asked me, "What is it that you do?" And I said, "I work for the IMF." And she said, "I don't want to talk to you anymore. You're with the bad people." I took it in good humor and I laughed myself. And she says, "Well, you're taking it quite lightly. I mean, don't you care about how people feel about the institution that you represent?" And I said, "I do. The issue sometimes is I find sometimes they're misinformed. So if you'd like, and if you have more time, I can buy you another cup of coffee and we can discuss what you think to be the role of the IMF in Antigua and in the world generally." Half an hour later, she left quite satisfied. She still thought I worked for the devil, but she thought I had a good sense of humor. And so we've agreed to engage in future conversations on the IMF. But for today's lecture, the history, governance, the roles, what it does in terms of surveillance, technical assistance, and lending. And I could touch on some regional issues, but I'd want you to participate more fully in the second part. The IMF actually is known primarily for its lending, and that's not its core role. IMF roots. The IMF was established out of a conference of the United Nations in 1944, following or just at the tail end of the Second World War. The attempts were by two economists, John Maynard Keynes from the UK and the Undersecretary of State in the US, Mr. Dexter, who had indicated that for a number of years, even starting from the end of the First World War in 1918, that they had recognized that a number of countries, predominantly the larger countries, were engaging in what we call competitive devaluation, reducing their currencies to gain an edge in trade. And that was causing retaliations by other countries in terms of having trade quotas and non-tariff barriers. So it was really interrupting the international monetary system and the payment system. So for about 15 years, there are a number of engagements by different international bodies trying to form some form of consensus of cooperation for the international monetary system. The end, or the tail end, of the Second World War provided that opportunity. And that tail end coincided with the formation of the International Monetary Fund, as well as the International Bank for Reconstruction and Development, which is better known as the World Bank. So we have two entities being formed, each with distinct responsibilities. The International Monetary Fund, responsible for cooperation on the international monetary system and exchange rates. The International Bank for Reconstruction and Development, simply to help in development. Their sister institutions, they sit right next to each other on 19th Street in Washington, and in a number of cases, they cooperate very well on issues for their members. Right now, the IMF has 188 member countries, predominantly all sovereign states. St. Lucia is a member of the IMF. It joined the IMF in 1979, about 9 months after it got its independence. So, issue one, St. Lucia is a member of the IMF. And the IMF treats it with that respect, as it does all other countries. So one of the things I explain to people is the IMF does not come into St. Lucia without the express permission and approval of the Minister of Finance, nor does it do so for any other country. Let's talk a little bit about what it does and how it starts off. Essentially, each member country has a subscription called a quota, in the same way that you would have, if you were part of a credit union, you have a subscription to a credit union. And you put in your subscription amount into that credit union, which gives you something akin to a share. So St. Lucia has a share in the IMF, which is equivalent to its quota amount. And that quota amount is 22 million US dollars. Now, that allows St. Lucia to borrow from the IMF under different conditionalities, up to, I think it's 600% of quota. But that also entitles, more fundamentally, St. Lucia to ascribe to responsibilities for surveillance and to get access to technical assistance from the IMF and any of its sister institutions. One key component of the quota is access to voting. Now, what the IMF has tried to do in the last, I think, 40 years is have a system of quota reforms. The last quota reform effort began in 2010 with the idea of changing the membership division of quotas so that countries, or the larger countries, or countries that have grown in terms of the economic importance in the global economy, are better represented at the IMF's board. In the last quarter reform effort, which is still ongoing, what would happen would be a shift of almost 6% to emerging markets, Brazil, Russia, India, and China. Under that quota reform effort, China will become the third largest shareholder or quota holder in the IMF. That's seen as very important because China, Russia, India are considered to be, in the case of small states, more reflective of the views of small states, more so than many advanced countries. And I think that's instructive because what you're trying to do is shift the balance of power so that emerging markets and smaller economies are better represented on the board. So that's issue one in terms of the evolution. Let me talk briefly about how the IMF works. So the IMF comprises of 188 member countries. Primarily the ministers of finance are the governors of the IMF. They meet at the IMF once a year in October to discuss policy issues and establish a mandate and responsibilities going forward. Most of that mandate is actually carried out or is ceded to International Monetary Finance Committee, comprising of 24 member countries. They meet twice a year, review the IMF's performance, review the performance of the global economy, undertake an assessment of what they see as the key constraints or issues affecting the international monetary system, and determine the agenda of action for the IMF going forward in a 6-month period. So they meet twice a year in spring, which is either March or April, or in October and November. And at each point, they review and revise going forward the plan of action for the IMF. Day-to-day functions are being performed by an IMF executive board. It's 24 member countries. It's a little difficult to see how they work in terms of representing 188 member countries. But what it would mean is that the larger countries have sole representation. So the US, for instance, which is the largest shareholder or quota holder, has its own executive board member. And so with Japan and China. Canada represents not only Canada, but Ireland and the OECS. Brazil represents not only Brazil, but it also represents Trinidad and Tobago. So what you have is, in some cases, a merger of a number of countries who have ceded their executive representation on the IMF board to an executive board member. That executive board is the one responsible for the management of the fund. They meet 3 times a week to deal with day-to-day issues, not only in terms of fund lending, in terms of administrative matters, as well as in technical assistance and determining funding requirements for the institution. It's managed, that is, the IMF is managed by a managing director, currently Madame Lagarde from France, who is supported by 4 deputy managing directors, 1 from Brazil currently, China, Japan, and the US. The US gentleman here, Lipton, is the first deputy managing director. Each has core responsibilities. Madame Lagarde is also chairman of the board. Now, civil society organizations, that's a little tidbit, have been saying she should not be chairman of the board. It should be the dean, represented by one of the other 24 executive members. That should be the chair. I say this to you to indicate that civil society organizations do think and do feel they have a right to indicate on how things are operating at the IMF, and do say so publicly. So that's part of our outreach activities in terms of inviting them in to get a sense from them of how the institution should evolve to be more representative of the member countries that they purport to take care of. The IMF today, I should actually correct that, comprises about 2,600 staff members from about 142 countries. So that's my latest update as of today. As you can imagine, with that diversity, that it's a little difficult to manage, but the issue for them was also to provide a gender balance and improve and increase the ascendancy of women as well as minorities in the institution. So that's an ongoing evolution in the IMF to recognize the right and ascendancy of women in managing the institution. And no better than to do it in terms of Madame Lagarde herself. Now let's talk about the three core functions of the IMF. First one is surveillance. And many of you would note primarily in the opening speeches of all our prime ministers in the region, they always talk about the IMF's World Economic Outlook, always give a perspective of what's going on in the global economy. That comes from the IMF's World Economic Outlook, which is done twice a year. We also do the Global Financial Stability Report, we do fiscal monitors, we have Article 4s, which are surveillance elements, which is a requirement that's be done with each member country at least once a year. Sometimes it might be once every 2 years, depending on the relationship. So it's in that element that I indicated earlier that we need to ask Prime Minister Anthony for his approval to have a team to come in and do that surveillance element. We do regional surveillance as well as global surveillance. And the global one is really important and systemic in the sense that it's not only understanding what's going on in the US, it's also understanding, for instance, how oil prices can impact on the performance of countries in the OECS and globally. It's understanding how a financial crisis from the fallout of Lehman Brothers in 2008 could have ramifications throughout the global economy for lasting years. It's been 7 years and we're still feeling the tail end of it. So that's all part of what we do. I think our greatest challenge came in 2008 because a number of people said we did not estimate, one, that there was going to be a recession, and two, that the depth of the recession would have been so long. Now, that's a fair criticism, and I think it's something that we've tried to explain, that it's a shortcoming of just how we function, trying to pull on data sources from across 188 countries, trying to understand the dynamics of how all these economies work, try to see how they interrelate. And in some cases, we make mistakes. And I think we've been very transparent about that in identifying where some of those mistakes have been made. But nonetheless, we're the only ones that undertake that kind of surveillance. And in the intervening years, we've tried to improve on what we do. So as of 2012, the IMFC, which is the 24-member entity that represents the IMF's Board of Governors, has indicated that the mandate and role of the IMF should be broadened to not only consider only monetary systems, but macro and financial systems that have impacts on member countries, and also to assess more rigorously systemic countries, what's going on in the US, what's going on in China, for instance, the impact that an implosion in Russia and the geopolitical tensions between Russia and Ukraine could have on Europe, what's going on in Greece and its implications for the longevity of the euro area, are all issues that we're interested in. I also want to indicate, as part of that surveillance, our responsibility is to be as ruthless, or as, maybe corrected, as even-handed as possible in terms of our discourse with member countries and their representatives, in terms of our findings. Now, that is not to say that we're right, or we're always right, but in terms of what we've collected, in terms of our assessment, we think it's our responsibility to share our views in a frank dialogue in as courteous a manner as possible with these authorities. Lately, this has also shifted. We feel that as part of the transparency and governance of the institution, that we should also be having these discussions with civil society, yourselves, NGOs, parliaments. And parliaments and civil societies are saying, yes, why do you feel that you should come into our countries, have discussions only with representatives of our governments, and not tell us precisely the nature of those discussions, the nature of your policy advice? We have a view, we have a say in these matters. We want to understand what's going on, and it's a counterweight in terms of trying to determine whether what we're being told by our respective governments is actually correct. So there's now been a move within the IMF to be a bit more forthcoming, a bit more transparent in terms of its operations, but also in terms of the advice that it gives. In relation to that, I just wanted to draw very quickly just a snapshot from a page on our public website of some of the Article 4, which are surveillance reports that we've had with St. Lucia over the past, since 1997. So all of these are publicly available on our website. You can download them and read them at your leisure. I dare say, though, that it's a little difficult reading because sometimes we write very cryptically. But if any of you are interested, I'm sure you can always ask the permanent secretary here to explain some of our assessments and our policy advice. I also want to indicate that we have written quite extensively on a number of issues in the region: public debt, tax incentives, and the regional harmonization, a lot on financial sector operations, and more recently, I think our engagement with member governments in the Caribbean has taken a turn for the better. Two recent developments. One is that since 2012, we've been engaging at the highest possible level at the IMF with policymakers in the Caribbean region at two forums. During the annual meetings in October, we host a breakfast event where we again indicate what our findings are and get feedback from as many people as possible represented by the Caribbean nations at that breakfast event. There's also a Caribbean high-level forum which is also held at the end of the year. This has been going on for the last 3 years. It's normally a day and a half. It's on key elements. The last one, which was in November 2014 and held in Jamaica, focused on 3 issues: energy, tax incentives, and the financial sector. And here, the expertise is not solely the IMF. We bring in people from across the diaspora, including people from the Caribbean, to speak on energy issues. For instance, the gentleman from Dominica who runs a solar energy farm for his hotel in Dominica, and as well as a lighting company that he has in Antigua, was a key speaker at that event, indicating how we could use renewable energy more efficiently in terms of diversifying our energy mix. So these are things that we've been trying to do to engage policymakers in the region. Now, this is the one I think we're known least for, the IMF as a coach. And as the first caption indicates, strong policies are built on strong foundations. The IMF has established 9 regional technical centers across the globe. There are 5 in Africa. There's actually 1 in Barbados. It's been based there since 2001. It serves 20 Caribbean countries on a number of different issues, which I'll highlight in a bit. There are also 8 regional training centers. There's none in the Caribbean. Because of our proximity to the US, the training center is actually at Washington, or in Washington. One of the things that we've also been doing is we've now moved and tried to embrace the technology and using massive online training courses, which are open to all. Open to all meaning no longer is it exclusive of people in the Ministry of Finance or central banks. Anyone who has an interest in it can actually go to our website and apply to be accepted in any of the courses on debt management strategies or debt sustainability, on macro-fiscal linkages, in financial sector programming, on subsidies, and any other courses that are available. So it's our attempt to reach out and embrace the technology to spread and train as many people as possible. I wanted to show you briefly what our technical assistance budget looks like for CARTAC and the countries that have been really participating. Jamaica leading it, with St. Lucia a close third. So that's an indication, I guess, of the usage of our resources on a regular basis on a number of the issues here: financial sector regulation and legislation, fiscal policies or fiscal administration, both in terms of tax administration as well as in customs administration, public expenditure management, working with a number of your departments, whether it's the Inland Revenue, whether it's the Treasury Department, working with your Statistics Department, and quite lately working with the Eastern Caribbean Central Bank. How many of you, for instance, have heard of the recent meeting of the Monetary Council, which was held in February 24th, which is 2 weeks ago? A lot of the part of that communique highlighted the legislative program that the ECCB has for March and May. And a lot of that work was done with the support of the IMF and World Bank in terms of recasting the legislation for asset management companies, the Resolution Trust, the ECCB Act itself, the Banking Act, and looking forward towards deposit insurance. So we've been doing a lot of work in the background. Quite quickly, I've just downloaded a number of the reports that we've done specific to solution on public finance management. Everything from improving the efficiency of government spending, public accounting, improving cash flow and forecasting, diagnostics, missions to St. Lucia, support to revise the chart of accounts, the fiscal accounts, improving the accountability and performance of parastatals. That is a really key one that's going on in all the OECS countries right now, because they've been really picking up on taxpayer flows to support their operations, and what we have is technical assistance basically to help in their governance, in their monitoring, in helping them set up business plans to improve their operations, and making a determination on whether or not parastatals should remain under the purview of the governments, or should they be let go and run as private sector entities. So these are some of the things that are going on in the background. The third one, in terms of responsibility, is lending. And that's where the IMF comes in as the bogeyman. So I wanted to just mention a number of components of the lending. The key one that everyone knows is lending with conditionality. And one of the things I ask people is to put things in context. We come in to lend primarily at the behest of a member country. We come in as the lender of last resort. Very often it means that a number of things have been tried before by member countries and have not worked. And so a member country comes to us and says, okay, how can you help us get out of this current impasse? And so we come in something akin to a doctor and try to help. In some cases, the adjustment that we ask is difficult. It does mean doing things differently from what has been done in the past. In many cases, it causes social discord. In a number of countries, that social discord is actually understood, in the sense that they understand where they are and what needs to be adjusted. They understand the change management required to get them back on track. Dr. Darius indicated that we worked on Rwanda, and he indicated that the Rwanda programs that we worked under were quite difficult. Well, I left Rwanda in 2009. In 2015, Rwanda has had average growth of 7% for the last 15 years. It's been under a fund program since 1994. One of the interesting things about Rwanda, though, is it no longer takes IMF financing. It has asked for what is called a PSI, a policy support instrument, which is, it asks for IMF guidance in designing its programs, but does not want IMF money. What it wants is the discipline. And that I find remarkable. It's not only Rwanda, it's Kenya, it's Tanzania, it's Uganda that are also doing it. So where we have program elements, where countries actually are getting financing from the IMF with conditionalities, and it's just like a bank that you go to and you're asking for a loan to finance your car, or to operate your business. The bank has conditionalities because the bank wants to ensure that it gets paid. We have these as well. We have the policy support instrument. We have standby arrangements with countries that do not have a crisis. They are concerned that the information that they have suggests that a crisis could be on the horizon, and they want contingency financing, just in case a crisis that there is a financing that they can draw down immediately to help get themselves out of a crisis. So that's contingency financing. And in the case of, I want to bring up these ones, in the case of St. Lucia, St. Vincent, and Dominica, they've actually borrowed for the IMF for emergency relief. So these don't come with conditionalities. All we ask is, in terms of our assessment, we get a determination of whether or not the macroeconomic fundamentals are sound, whether or not governments are willing to pursue strong policies going forward, and on the basis of that, we provide them with the lending. So these don't come with conditionalities, but it's normally given to countries that are in a good, strong macroeconomic fundamental establishment. I wanted to go quickly back to this one, which indicates our lending to a number of countries in the Caribbean, Jamaica, which everyone is familiar with and for which we mostly get the bogeyman name, but we've also lent 500 million, 500% of quota to Antigua, 600% of quota to St. Kitts, and these are the more recent ones. We have another round going with Jamaica, and last year Grenada started a program and is doing quite well under that program in terms of its own operations. So these are three of the elements in terms of our role and function. This one I can say quite briefly is that component of outreach, where since 2006 we've been trying to listen to civil society groups and meeting with parliamentarians, NGOs, media, and trying to get a sense from them of what it is that we're doing right. We're being roundly criticized, but I think we're handling that fairly well in terms of trying to make amends. And in a number of cases, we actually invite these groups up to the IMF to have these discussions during the annual meetings and to sit in on some of these committee meetings that are going on with the IMFC and the Board of Governors, so they actually get a better sense of how these things unfold with a larger grouping. So this is what I have in terms of the IMF. I can take any questions that you have now, or I can move in and tease you with 3 or 4 slides and get your reactions to what's going on in the region. What I want to show you is just this. So this is my teaser to you. The first 2 slides basically look at regional economic performance. The first one is real GDP growth from 2006, and we're showing a very deep trough, which is the start of the recession, which has lasted, for the most part, for almost 4 or 5 years. We now have indications that over the last 2 years, Dominica, Grenada, St. Kitts, to a lesser extent Antigua, have grown. They're growing, but they're still way behind where they were in 2007. So we're seeing the beginnings of growth, but we haven't caught up. So this recession has had significant damaging effects on all our economies, and it's one of the reasons why unemployment is so high. The second graph shows tourism arrivals also improving. A lot of that is being driven by the developments in the US. The US has now recovered. People are spending. You see them coming in droves in cruise ships, and they're staying in your best hotels. So prospects for the future look good only because the US, the UK, Canada are also doing well. And I think it's something that we need to bear in mind. Our operations, our economies are being driven by external factors. They're not being driven by what we're doing domestically. But we'll get to that in a while. I want to also draw to you what's going on the financial sector. Credit to the private sector, which is this line here, which is basically bank lending to the private sector, is still on the decline after all these years. In fact, it's negative. So every year banks are lending less than they did the year before. Ms. Carrasco is a businesswoman. I'm sure she can tell you some of that. And that is despite the fact that banks have surplus liquidity. So the money is there, they're just not lending. Charmaine Gardner, my apologies. Okay, so liabilities to private. Throughout all of this, banks are accumulating reserves. And they're accumulating those reserves in foreign assets. So the banking sector is accumulating money. The private sector is getting none. Okay? So that's something I just wanted to think about, because I want to ask you, what do we do with all of that going forward? So that's the issue. Issue 3 is the issue of debt. Now, in 2009, the Monetary Council established that they were going to have a debt to GDP, they've targeted debt to GDP of 60% by 2020. Okay? Throughout this period, we're looking at this line here, 60%. And this blue line is actually where they are. So throughout that period, they've been way above 60%. And the question you ask yourself is, when are they going to make that adjustment? Or how will they make that adjustment to move from up here to down there? The recent pronouncement by the Monetary Council is a recommendation that countries move to 60% of debt to GDP by 2030. So they've pushed it out another 10 years. Okay? So your question would be, well, what is it they're going to do differently that they didn't do before? But that's your question to ask, not of me, among yourselves. So that's another issue that we can touch on. We've had good improvements on what we call the external side, which is because of the reduction in oil prices, we're importing less, which means we're tapping less on our reserves. And the good news means that our accumulation of reserves that the central bank uses to back the EC dollar is looking good. So that's good news. One component of that is actually coming from St. Kitts because of their Citizen by Investment scheme. It's reputed that St. Kitts has more than $400 million sitting in the banking system because of the CBI. Last year alone, they got more than $220 million. Antigua, which has also picked up the scheme and began operations last year, has almost $63 million in CBI receipts. St. Lucia is considering it as a means of attracting foreign investment. But you have to ask yourself, well, what is it that St. Kitts and Antigua did that St. Lucia is going to do differently or better? And if we do get those receipts, what are we going to spend it on? So that's issues for you to consider. Okay. Throughout everything, though, we're saying that generally there's some risk to the downside. We have issues on the financial sector that still need to be addressed because a number of banks, you still have the 2 Anguillan banks that are under conservatorship. You have 1 Antigua bank that is under conservatorship since 2010. These need to be resolved. That's publicly known. We have a number of governments still in difficulty fiscally in terms of their ability to borrow or their ability to lend or the ability to invest. So these are issues that we need to resolve. We see a few risks in terms of Petrocarib. One of the issues that we have is, for instance, Venezuela is purported to contract by 1% in terms of the economic activity this year. Inflation is at 63%. Whilst they've indicated that they're going to hold fast to the Petrocarib arrangement, which is good news, the question is how long can they sustain it? So it's a potential risk that we've asked persons or governments to be wary of. On the upside, the Citizen by Investment schemes are providing lots of inflows and much needed foreign direct investment to a number of those countries. And the oil prices are creating, I think, a good boost to economic activity in the sense that it's reducing businesses' cost of operations, it's providing households with more disposable income, and so they can spend more. Okay? I'm going to stop at this slide because I think that is the crux of the matter that we need to ask ourselves. Despite the fact that we are now growing, if we compare our tourism economies with a number of other countries, emerging markets, advanced economies. I want you to note that this is it here, this is the red line. This shows that our trending of growth from 1995 has been slower than all other peer countries. And I can skip this element here because it's commonly known that in situations like these, the unemployment will be high. But the question that we've been asking, and when I say we, the IMF, when we go around talking to countries, is how do we address this? Because it must indicate that we're doing something fundamentally wrong. Now, I have some responses to that, but that's where I want you to come in to tell me what is your understanding of a number of those things, and so we can have a bit of a dialogue. So, with these few words, let me end the presentation here.
Currently, we provide tourism services and we grow bananas. Both of those are what you might describe as luxury products. Therefore, as you pointed out, if the North American and European countries' finances go down, then people don't want to eat bananas, well, they can do without them, and they don't want to go away on holiday to somewhere expensive like this, so they do without it, and we end up getting stuck.
Right.
I am wondering whether the IMF has any ideas of alternative things, which might be things that people might want all of the time, so that we were not quite so subject to the fluctuations in what's happening financially in the North.
Before I answer your question, let me just move on to this slide, which was my ace in the sleep. And your issue is, how do we address the decline in tourism arrivals during these exogenous shocks? So you have something going on in the US, you have a recession, tourism arrivals decline, you have a hurricane, tourism arrivals decline, and how do we diversify the economies so that we are not subjected to that volatility? And that's an excellent question. That's actually the question that we have been doing over the last week and a half. As a team, including myself, have been going around talking to ministers of finance. So what is your view going forward? And how do you change the structure of these economies so that this doesn't happen again? How do you change your operation so that you no longer sticking to a tourism industry that sees their interest in your products only between December and April, and afterwards your plant completely closes down? What is it you're doing in terms of changing from all-inclusives to having a more community-inclusive and increasing local content in your tourism industry, so that you have heritage tourism, community-based tourism, you increase the local content and value added? So these are some of the questions that we're asking. And whilst we're doing that, we're also pointing to this. During that decline from 2007 that we saw in the OECS, Jamaica and the Dominican Republic had increased tourism arrivals. So what is it that they're doing differently from you? We didn't have the answers. We focus primarily on the macroeconomic stability elements. We rely more on the World Bank, the Caribbean Development Bank, that have the sector expertise on these issues. And we're also asking, what are the nature of your interactions with policymakers and tourism industry officials in terms of addressing that? I should say, though, that one of the people that you would be very useful to talk to on this would be Dr. Didiscus Juice, because he is currently working on a growth and development strategy for the region that tries to address this very issue. I know he has a draft document that they're currently trying to fine-tune for discussions with policymakers in the OECS sometime this year. I'm hoping that it helps to address that. But in discussions with him, there are a number of different elements in terms of diversifying the tourism plant. From short stay to long stay to cruise ship to yachts, tourism base. We're trying to get the backward linkages with other services, to get forward linkages to deal with agriculture, reduce import substitution so that farmers now have to increase import substitution so that farmers now have a big input into the tourism plant and have greater local value added. So these are some of the issues. I don't have the answers, but I think it was an excellent question.
You pointed to something in one of the slides that showed the extent to which bank borrowing was on a decline and bank reserves were actually increasing. What this says to me is that the banks, as an agent of economic growth, may be dropping the ball. My intention is not to put the blame on the bank, because I do understand why the bank may not be inclined to borrow. There are prudential guidelines. One, there is an increase in the delinquency rate, among others. Two, but it occurs to me that if economic theory would have spoken about what we can expect when the bank is not lending. So if we're not getting that financial deepening, what is it that we can expect? Because there's some lag that is going to extend from that lull in lending, and what is the impact likely to be, and coming from that as a countermeasure, what should we be, as a nation, be seeking to do?
All right. The slide on your left basically shows what's going on in the banking system and why banks are reluctant to lend. The set here represent the ECCU from 2007. And what we're seeing is that every year, non-performing loans have increased tremendously. In fact, they're among the highest in the region. And in that scenario, banks are extremely reluctant to lend because there's no confidence that a lot of those projects will be viable projects. So the money is there, but they're saying without accurate financial statements, without viable business plans, they're not going to be putting money in what we consider productive enterprise. They'll probably lend for consumer loans, for cars, for your appliances. They might lend for mortgages, but they're not going to do beyond that. So here is your quandary. And so the question that you're asking is, well, how do banks intermediate those liquid deposits into something for production? But one question would be, are banks the right instruments to do that? Are there other entities that should be doing that? Is that something that your development banks would have a better capacity to do if they were perhaps better staffed or had the wherewithal in terms of long-term resources which they could lend, and also provide the guidance to business persons, to agricultural, to farmers, and guide them through doing those business plans. So the issue that really comes out is that we have a very narrow financial system that cannot provide the instruments or the facilities of lending and providing access to finance to a number of elements in our productive sector. But this is such an old story. Moving forward, there's been for the last 20 years a financial sector development strategy that has been geared to do a lot of what we've just spoken of, to move the pivot from commercial banks to venture capital funds. That's the basis for the establishment of the Eastern Caribbean Stock Exchange, which was geared to bring in the private sector to undertake a number of these investments on their own. But we don't have that kind of educational fillip that would encourage persons to take that chance of investing or of putting their companies on the market and dealing with shareholders and under a corporate governance framework. So it's one weakness of our societies in terms of how they're structured. People have been saying for a long time that businessmen don't want to be subjected to corporate governance. They'll run things themselves. Yeah. We can't change that system. If we don't change that system, we can't better the financial system.
I'd like to know, what does the bank say or think about the question of those developing countries setting up their own banks and institutions to compete or to work and do what the IMF is doing, what the World Bank is doing?
Okay.
That's the first one. The next one is our import bill for food in the Caribbean, I think was $6 billion, was the latest figure that I must have read somewhere. And the whole question of corruption in African countries all over the place. Does the bank look at those things when it does all these surveys and all these recommendations and so? And then how do they see themselves reducing that or countering that? Thank you.
I think what you speak of is more a reaction, say, to the BRICS in having their own development institution. So it's against more or less the World Bank. And I don't think the World Bank is unduly concerned. It is concerned in the sense that it probably is a reflection that these group of countries are not satisfied with the products and instruments that it now has and whether or not these are suitable to their own operations. So that's one issue. But fundamentally, I think, remember, it's part of the evolutionary process. At some point in time, entities will have the wherewithal to do things on their own. And there's nothing that could prevent them doing that. In fact, it's something that we should encourage. It does mean a diminution in terms of our own operations, but we can say we might be the victims of our own success. China, with its massive reserves, does have the wherewithal to lend to other countries. Mexico, that's also growing quickly, could do the same and say, we want to have tailor-made instruments that better suit us. Yours, which tries to be even-handed across 188 countries, does not take the particular nuance of our region at hand. And so we reserve the right to do it for ourselves, and that's fine. It does mean, though, it puts institutions like us that are so-called international institutions, it puts the pressure on us to evolve and modify what we do to suit different groups of our membership. So that's okay. Your second question was in terms of import substitution as well. Well, imports in general, in the sense that it's a large growing bill. And the other issue was in terms of governance. The second one, in terms of governance, is more the forte of the World Bank and development agencies, less so the IMF. But it's something that we've also recognized, that where governance systems are below par, you're likely to have suboptimal outcomes. And in the technical assistance elements that I tried to show earlier, a lot of that technical assistance is improving legal and institutional frameworks and trying to strengthen transparency and accountability. So giving a larger role to Parliament, making sure public accounts committees, which are select committees within Parliament, are better equipped to assess financial statements, to review the operations of state-owned enterprises, to even sanction and review the operations of the Ministry of Finance, is something that we encourage and we provide support. The latest round that we've been doing in two of the countries, in Jamaica and in Grenada, for instance, has fiscal responsibility legislation, which is to codify specific rules and operations of governments and ensure, to the extent possible, to the extent that your parliaments and your civil society are suitably empowered, to ensure that governments who openly state these rules as part of the legislation adhere to them as closely as possible, or provide explanations why there was a deviation. And sometimes those deviations would be justified. You get hit by a hurricane and you need to change your operational framework and spend more, even though it indicated that under this fiscal rule you'd have spent X amount, or your debt to GDP target would have been Y amount. You've had to deviate from that because of these exigencies. But you also explain what you're going to do to get back on track in the medium term. So it's a very valid question. We are concerned about it because it does have implications in terms of your use of funds, your efficient use of funds going forward, and to the extent that you get the outcomes that these spending or your fiscal policies were intended to achieve.
What does the EMF representative for the OECS countries think about the fact that one of the OECS member states is criticizing the IMF and has decided not to work anymore with the IMF in the programs that it was developing in that country first? And then the second one is the OECS countries have complained about the fact that the International Financial Institution declare them as middle-income countries when they are not.
I can actually show you what exactly happened, because that happened under my watch. We were launching this book, Public Debt in the Caribbean, and the Prime Minister was the feature speaker. It's the incoming Prime Minister. He had issues with how the program ran under the previous administration, and he vented his views, indicating that he did not think that the program was helpful to Antigua in terms of getting them out of the crisis, and he was a little put off by the fact that now he had to make payments to the IMF, where he could not justify to his public that the IMF support had been helpful. And our view at the point in time was that what he should consider is the counterfactual. IMF provided him or the country with financing for 3 years, equivalent to almost 85 million per year. If you take off that 85 million per year, he would have had to have made an adjustment in his fiscal operations of 85 million. Now, there are two elements of it. What was he going to cut in terms of expenditure, or who was he not going to pay? Under a policy where you're not cutting public servant salary or numbers, and at a time where capital expenditure for road infrastructure, for training, or expenditure for training was already minuscule. So what would give? The question was really, could we have done collectively better? And I think now he realizes that an IMF program does not work in and of itself because of the IMF. We're here to help. So it's a broad stakeholder consensus that brings it forward in terms of the strength of your program. So that's issue one. The other issue, though, is that despite that pronouncement, we've been working a lot with him in the financial sector resolution of ABI Bank in terms of continuing to provide technical assistance for cash flow management, in tax administration, in customs administration. So I understand that he was upset and he vented his frustration, and that's fine. But in the meantime, we continue to work together as we should. At the end of the day, Antigua and Barbuda is a member of the fund, and our obligation is to help as best as we can. What's your second question? Remind me. The middle income one. You know, I like to ask the permanent secretary for that one. But it's a benchmark that existed for how long? It's common knowledge that there are thresholds that the international community has set that determines the concessionality of their financing. So that has been set. I mean, yeah. And a number of countries, I'll give you an example. I read recently that Philippines, Malaysia, and Thailand actually featured that in their own operations going forward because they were low-income countries too. But in their own development planning strategies, they do what I call 20-year plans. They had factored their graduation in terms of the higher income levels as a feature that would come in 20 or 25 years. And they set up systems in place where they would be robust enough so that when donors reduced lending on concessional terms to them, that they would not feel the impact of it. So Dr. Darius normally calls these things in terms of shocks. There's some shocks that are temporary, there's some shocks that are permanent. This one is a permanent shock. You know it's going to come. And the question is, what do you put in place to address it? In the same way that we knew banana quotas would have been taken away from us for years. What do we put in its place? How do we change the structure of our economies to address that? As difficult as it is, that's something that we had to face. This is something to work on. Hurricanes hit us on a regular basis. What do we do in terms of our buildings, in terms of our setting up our infrastructure? What do we do in terms of insurance to address that? So some things are going to happen. This middle income and high income was a permanent feature that has been publicly available for all of us for years. Now that's not to say that it's not a difficult adjustment. So that much is true. That's not to say that and that still means that we now need to help address these things with them. But I don't think it's up to the IMF or the World Bank to change that structure now.
I'm going to go to a more provocative subject of the PR relations and the fund perception, the perception of the IMF in the Caribbean. Just your views on whether you think you're making inroads in trying to get people to have a less negative view of the IMF, the view that it's part of this new colonialism mechanism. What's your take on it in terms of the Caribbean? Because one of the surprising features, these places like Rwanda, where they accept the fund, they want them. I was also shocked, I remember when I was working on Armenia, where they just did not want the fund to leave. And it's a totally opposite thing in the Caribbean. So just your perspective on that.
Question. In some countries, it's better than others. In Antigua, I think it's something that we're going to have to work towards in terms of explaining our role and providing them with support. I think it's much better now than it was in August last year. In St. Kitts, because of the success of the program, and a lot of that success was really from the CBI. So the extent of the adjustment that they had to do was not as much as they would have had to have done, in a Grenada or in a Jamaica. I think there's more acceptance of the IMF. I mean, when I go to St. Kitts, for instance, I very often get invited to do radio programs. So we're not so much the bogeyman in some countries. In other countries, I think there's a lot to be desired. There's a lot that we have to do. And when I look at it in terms of comparing my role in the OACS compared to, say, Ghana. In Ghana, I would meet with the Parliamentary Finance Committee 3 times a year. Every time a mission came in, they'd invite us to speak with them. The first 2 were quite contentious. But once they understood that it was an open dialogue, we could take the criticism, we could give the criticism, but fundamentally what we were there to do is to discuss our role in Ghana and to share with them and explain our policy advice. They were extremely welcoming. So my last meeting with the Parliamentary Finance Committee was a box lunch meeting. So that's how informal it had become. Think tanks, same thing. I think this is something that I would like us to do. I mean, something I'd like to see happening in the OACS, moving towards having these frank dialogues. I think we have extremely frank dialogues with the prime ministers. They don't fear us, and very often they welcome the advice. What they don't like, they say up front they don't like. I disagree with you, Mr. Mitchell, or Mr. Aline, or Mrs. Carlata, whoever the mission chief is, and that is their right. If we can't justify, if we can't provide proof, if we can't provide sufficient evidence to back a policy, I think we should be criticized.
Popular opinion now seems to be that the answer may well lie in the empowerment and development of CSOs, working from community levels, especially with regard to dealing with environmental issues and feeding ourselves. I just wanted to know a little more about the interaction, the level of interaction of the IMF with CSOs, the nature of that interaction and the kind of support that is possible, from the IMF end, and also a little more about the relationship between the IMF and other and United Nations organizations, the more socially oriented ones like UNESCO and UNDP.
If you listen to the UN would say the IMF is a sister agent. In fact, it falls under the umbrella of UN agencies, and we celebrate the UN as in such a manner. The IMF actually has a representative at United Nations in New York. So that's one aspect of it. Fundamentally though, in terms of program design, the UN through UNESCO and the UNDP have been very instrumental in helping in crafting what we call social targeting regimes. So to explain it a little more broadly, a number of governments want to provide support to the poor and vulnerable in society. There isn't a very good mechanism in some cases to do so. They might give a blanket subsidy. So as an example, for instance, they'll say, rather than having housewives use charcoal and contribute to deforestation, we would prefer to subsidize LPG and use that as a medium for cooking. Now that's a blanket subsidy. So what you may find in some countries are taxi drivers convert their cars to run on LPG, which defeats the purpose. Now, the UN has come up with something called proxy testing, where they're actually using household expenditure surveys done by statistical offices and go through communities, talking to people, trying to get a better sense of who are the poor and vulnerable in these communities and map that out. And then work with governments now to provide relief, cash relief to those. So it's more directed, more targeted at the poor in society. And the UN has been very good in doing that in a number of countries. I understand that they're trying to do this now in the OECS. Our programs would feature that aspect of it. So that relationship is there. Remind me of your first question. Your first question was, how do we work with civil society? That varies by country. I think what Dr. Darius was also trying to allude to was also an indication of how well are we doing in the OSS relative to Albania, for instance, where there's no stomach or appetite for an IMF, or to a Ghana where they're more welcoming. And so the engagement really depends on that much that you can get in terms of support from civil society. So I would try to do it, but that doesn't mean I'll be successful. I've been more successful, for instance, in meeting with Employers Federation, trade unions, chambers of commerce in Antigua and St. Kitts than I have been, say, in St. Vincent. At the same time now, on a broader basis, as part of the annual and spring meetings, there is a dedicated program to bring representatives from civil society across the IMF membership to attend these meetings. So in the OECS, I would recommend a journalist or someone from a youth group or a parliamentarian who the IMF would sponsor to bring to Washington to meet and to participate in some of those committee meetings, as so will be done in other member countries, depending on size. This is not something that's going to happen for the US, for instance, in terms of inviting civil society, but you'll find a number of African countries or Asian countries represented in that forum. And they get a sense to make their own assessment of what's going on in the global economy, how well the IMF is performing. Very often we don't change their minds on some of those things, but some people understand, they have a better understanding and appreciation for what it does. In terms of actual support, are you talking about financial support or technical support? We don't have a framework where we provide financial and technical support to civil society organizations. Where we would help is in terms of doing, primarily in terms of technical support, helping them do strategy and guidance notes along those lines. It is primarily the role of your hardcore development partners. The World Bank has a dedicated component in terms of civil society support, and so do a number of other bilateral agencies. The Germans, for instance, or the EU will be doing more of that.
I would like if you could go to the slide that showed the technical assistance, where you had Jamaica, Dominica, St. Lucia, and you said we make great use. Yes, the top three. Is that grant funding or concessionary loan funding under that? This right there. And I look at Haiti, Belize, and so on. I would have thought that Haiti would have been in need of greater technical assistance than Jamaica, Dominica, St. Lucia, overall.
This is actually free. Member countries do not pay for technical assistance. What actually happens is the IMF, in addition to a number of donor agencies, put towards a trust fund, which they use for the operations, the administration, and technical assistance that, for instance, CARTAF would provide to the 20 countries. Now, technical assistance is demand-driven. So there are two things. It could be a reflection of how familiar Haiti is of CARTAC's existence and operations, and the extent to which it asks for advice or technical assistance. Clearly, Jamaica knows and has asked. Now, right now, Jamaica has quite a lot of donor support. The IMF has given it, what, 980 million US in terms of financing. The World Bank and Inter-American Development Bank have given it an almost equivalent. So there's 2 billion in resources that I think that are provided to Jamaica's support under that arrangement. No, that one though is loan financing in terms of the program. Theirs is probably around, I may be wrong, but I think around 3.5% in terms of interest rate. But technical assistance though is free.
I want to go back to the issue young lady asked concerning the use of the per capita income indicator and the argument that has been put forward by some countries. For instance, Antigua and Barbuda is considered high income.
Yes.
It's about 9,000 something US per capita income thereabout.
Yes.
When you compare Antigua to, let's say, Singapore with about a little over 50,000 US per capita.
Right.
And the US in the same region.
Right.
I want to ask two questions related to this. One, what was the rationale for determining at what level of per capita income is a country high income? That's one. And two, consequently, is there really an argument now for a realignment of this? When you compare, like I said, an Antigua that's high income but has what, 9,000 US per capita income, and a Singapore that's also high income, and there isn't anything beyond high income, with 50,000 odd US per capita income. So I want to hear your thoughts on that.
And concessional financing comes from some taxpayer. Okay? You're asking a group of governments to provide a group of countries of varying capacities concessional financing. Concessional means it's below market rates, and the terms are normally extensive. In some cases, 20, 25, 40 years. That's the nature of concessional. You need to make a determination, or countries need to make a determination of which of their members are more deserving of concessional financing. Is it a country, a low-income country, for instance, like Rwanda, that has a per capita income of 750 per person? Or is it a country that's making 9,000 per person? Or is it a country that's making 15,000 per country? Okay? Now, given that these funds are limited, because now you have to get pledges from advanced economies to take so much of their taxpayers' income and apply it to various countries. You have to get pledges. I think there was one time, when it was in 2000, when the UN got a pledge from OECD countries that they would provide, was it 1% of their GDP towards this, and in a number of cases they haven't been able to do it. But nonetheless, issue is you're asking taxpayers from one country to provide to another country. And you needed to make a determination. I don't know what the metric was. At what level do you make, you indicate low income, from middle income to high income? And that, I suspect, was done sometime in the 90s, or maybe much earlier. And they've tried to increase it in real terms by looking at inflation. It's not a perfect measure. Caribbean countries, small island development states have indicated that it's an imperfect measure when you consider our vulnerability, our small size. It's an imperfect measure when you consider the vagaries of climate change and natural disasters. And so some allowance should be made to not to graduate us and treat us like other countries. To some extent, some of that has been done, because up until recently, I think St. Vincent and Dominica was still considered low income, even though the low income threshold is 1135. They're at 6,000. So some allowance was made to grant them concessional financing, accounting for that vulnerability and that size. They're saying it's still not enough. So some other metric has to be designed that they can fit in. That hasn't been done.
But forgive me, maybe the question I'm going to ask is a little bit controversial, and it probably may impinge a little bit above your pay grade, as you indicated a while ago. It delves into policy and those at the higher level. But I believe if we go back to what we are really looking at right now are symptoms of a bigger macro issues. And I'm saying, I think both member states, like the OECS as member states of the fund, and the fund itself may have faltered. Well, we have faltered as member states, but I also believe the fund has faltered in terms of not responding adequately and sufficiently to the vagaries of globalization and trade liberalization. And I go back to from way back as the 90s. I think if we go back, we will see that, and doing the analysis, maybe from hindsight, you could say 2020, you know, that small states of our size, mono economies, mono sector, whether it be services or tourism, whichever way you want to put it, at one time agriculture based, being challenged by the vagaries of trade liberalization and globalization. You mentioned the issues, I'm not going to the climate change and all these other issues, the inherent vulnerabilities and so on. Of necessity, one would have recognized that these countries certainly would not have the capacity to respond and respond quickly enough to, particularly within the last decade, the rapidity with which globalization has been impacting, compounded by the issues of the financial and economic global, the global economic crisis and so on. Having said all of that, I would want to know, one, does the IMF has a social responsibility policy in place? And how often is that reviewed? And two, would you consider that it may very well be necessary, given the gravity of the situation, because what we have here right now in the OECS are deep structural issues. High cost of governance, high cost of energy, high cost of transportation, and the rest goes on. A private sector that is in terms of its responsiveness to entrepreneurship and those kind of things is very conservative. Banks, highly banked region, high cost of financing, and so on and so forth. All of those issues are negatives we're talking about, as you rightly pointed out. I am saying that it may very well be necessary to consider an appropriately designed Marshall Plan for the region for the next 15 to 20 years to see how we can realign, starting with, and some of it will have to be nationally driven, of course, by the governments themselves, regionally driven at the level of the OECS, and probably even at the CARICOM level. So I'm saying there has to be some rethinking, some re-strategizing, okay? And the whole issue has to be, how do we redesign those structural, what I call deformities, that need to be looked at? And I think the benchmark and the template that we are looking at, if the template that IMF is working with, to me, is not in sync with the reality that we have. If you're going to continue to apply that template, it is not going to work. And so we need to realign that and redesign that template to see how we can help. Which is where I think, which is what I think we have to do. So I don't know how you would want to think of it, but it is something that I think that requires a lot of thinking at both levels, not just at the local, regional level, but I think also at the level of at the international level, World Bank, IMF level, and so on. And even the UN going forward as it relates to post-2015 development agenda.
But let's say I agree with you. Let's say from what we've shown that we're seeing serious structural deficiencies. Whose responsibility is it to change?
Yeah, I'm not saying we don't have a responsibility, but I'm saying I don't think we have the capacity to do it all by ourselves.
Okay.
Even the
So,
magnitude of the challenge.
right.
Yeah.
Now, the question would be, if there is a desire to change, whether or not the IMF, World Bank, and other entities would be willing to provide the support. And there are two elements of the support. There will be technical assistance, which we are already giving, and there will be financial assistance. But the financial assistance would come not as free financing. It would have to be conditioned on what are you going to do with that financing so that we are ensured that that structural change does in fact happen. When you look at, I don't have it on my computer, but if you look at Jamaica program or Grenada program, you'd see how much of it is in structural reforms, institutions, legal framework, processes, manuals, providing diagnoses on a number of your productive sectors, institutional training. So that's what you're talking about, rethinking your strategy going forward. We can do some of that, and we would necessarily need the support of sister institutions, the World Bank, the CDB, and others, to provide that complement where we don't have that expertise. But can you think of a number of prime ministers that are going to say, let's do it?
Well, our backs are against the wall. I mean, reality check is.
But but at the end of the day, we can only come if invited.
Our invitation.
Yes.
Yeah, I understand that. Right. I understand that, but I'm saying at some point, we have to, you know.
But that's a determination
It has to be never.
your civil society makes together with a government in some way. How do we move from here? How do we engage the private sector? How do we change what we're doing in tourism, in agriculture? How do we improve productivity, change the governance structure? I mean, there are simple stories that start from, do people come in to work on time? Do they give a full, I mean, it starts from as basic as that. So it's a whole cultural change. And a willingness to subject yourself to the new rules of operations. We can provide part of it, but I mean, basically the onus is on our societies to say, this is what we want to do. And some countries have done it.
I'd like to thank Mr. Mitchell officially. I thought that the lecture was very listener friendly, straightforward, but packed with information, highly informative. And you know, I was a little apprehensive because I thought, okay, it's going to be about economics and accounting and so on, and might alienate our audience. But I must say, Mr. Mitchell, you did an excellent job in breaking down everything and presenting us with the facts very unemotionally, and I think leaving us with a number of questions and issues that we can discuss later on. I'd like to thank also Mrs. Crane Mitchell, Leslie Crane Mitchell, and Mrs. Marlene Francis for putting this together, getting it organized in very quick time, and of course your ability to be on the ground with us. And thank you all, audience, for your attention and for attending.